Hey, Alpha fam, welcome back to another episode of Alpha Commission. And as we can see, I guess even a sea of red cannot stop lunch, you degens. So let's just go ahead and check out what's going on in stocks. As you can see, stocks is having a pretty big red day. This probably isn't all settled yet. We still have much of the day to go. But as you can see, just a red creeping across the board. It's not actually as traumatic as it might look or feel in seeing the charts dip, but this does suggest some weakness. And of course, that weakness is coming from that stronger than expected PMI report, which, while the S&P US services was down from the previous month, the expectation for ISM services, basically, we're talking about manufacturing in the US. So basically, how strong, how robust the economy is. It was expected to be 55.5%. There was a 56.7% previously. And look at this, we got a 56.9%, which is actually higher than the last rating. Now, you would expect with the Federal Reserve trying to cool down the economy, right, in order to stop inflation, then if we see these higher than expected manufacturing reports, then that would suggest that manufacturing is still pretty high, and that would suggest that the Fed has a lot of room in order to increase interest rates in the future. And what we're seeing here is just a fear in the markets that that stronger than expected manufacturing report is going to contribute to the Fed increasing interest rates and therefore knocking the stock market down a peg in their September meeting coming up. Of course, tomorrow we do have some international trade balance business to be looking at, but nothing too significant. More importantly, will be these discussions by the Fed chairpersons. Okay, so let's just go over to the chart. You can see that Bitcoin is reacting on this news. Of course, we should expect a leg down. And if you guys thought that I was being over bearish by suggesting that you take some profit, to always be taking your profits while Bitcoin was in this very clear distribution wedge that I've been mentioning for the last few days, then you guys should probably take a look at this huge red candle to the downside, as I did mention that buyers would eventually be exhausted at the bottom of this wedge as sellers were pushing the price down, down, down. And so here we are. And you can see that that measured move, of course, does go along with that baby bull flag, baby bear flag that I had been pointing out here, which of course is this measured move basically right here. And so we could expect an even bigger drop. These drops sometimes do come in a couple different waves, but if we're just conservative, I guess we could take just a small flagpole and say perhaps the majority of the move is over already. But we just should be on alert, because whenever we have these breakdowns, we tend to have two legs down, and when we have huge breakdowns like this, we tend to have three legs down. And since these are daily candles, you can see that this was 1, 2, 3, 4, 5, 6, 7, 8, 9 days of just straight downward action right here. And they all started with these little types of candles, which you can see. And so, if this is the beginning of that kind of a huge drop in perhaps the stock market or crypto, then you just want to be on your toes. Okay. Of course, there are going to be pauses in the market. There could be a higher floor than what I'm proposing here. This is a very bearish scenario. It just happens to be my favorite spot to target, but of course we could bounce in other locations. In fact, if you want to take a look at some of these key areas, then perhaps we could be talking about 17,200. We could be talking about these areas in perhaps 14,000. And this thing doesn't have to go straight down. It could meander a bit. But, I think the key message here is that those momentum zones really do work. You can see we lost the momentum zone. We were in that distribution wedge, and having broken both of them, we did just collapse to the next significant levels lower. Of course, putting in a bit of a double bottom here if you just ignore these wicks. And on CME, I can show you that a little bit more clearly. But Bitcoin, as I mentioned, was looking incredibly bearish, and we have broken down. In the past, as we've kind of been carving out this wedge to the downside, you can see that these type of breaks from the top of the wedge, this is a downturn here, have not been good for Bitcoin. They have resulted in significant drops. And sorry, I'm just fooling around with this line right there. But if you take a look even at this line, right, and just take a look at how the bottom of the wedge also reacts, right, then you can see that we basically fall all the way to the bottom, and that does suggest that $14,000 area. Now, in order to get below that, we would probably have to break this wedge to the downside. I think you can quite clearly see that there is this kind of wedge formation, here, and so, breaking to the downside is highly possible. Now, if we were for some reason to break out of this wedge to the upside, that would be something new. That would be a break in our downtrend. And so we are going to be watching how Bitcoin responds because this falling wedge does have a tendency to break to the upside. And there's 1, 2, 3, 4, 5 points of touches. And after 5 points of touches on these type of rising wedges, they tend to be towards the end of the wedge, and they tend to break to the upside. But of course, right now we can only talk about falling to the downside. But I did want to present that kind of alternative theory that we're at the bottom of the market and that Bitcoin could just break out and maybe just go sideways before eventually going up. Based upon some type of a Federal Reserve pivot in policy. Until then, we're just going to be watching this system for a potential catastrophic breakdown to the bottom of this wedge because no one says it has to have 5 touches. It can actually have more touches than that, and they often do as markets push down. So we're going to just be paying attention to that alpha fam. Let's jump over to the Bitcoin CME chart. Of course, on the CME chart, we have something very similar being put in. Of course, I am just on that previous analysis of my target for the bottom. This is, of course, just a hypothetical target. And as you can see, I do have a fractal of the breakdown that we had up here, and I've actually put it down in our current location to see what it would look like. And it's just interesting that you can see that we are actually following the top of that fractal perfectly and how it broke down. So, if we do just have a little bit of a pause right here, and then we could have a traumatic breakdown, that would be in line with the previous psychology of this market, the previous drop area where you can see something very similar psychologically happening in the market. And of course, fractals are just psychology. They are not they are not really a theory of the market itself. They are not, any type of a prediction, and they do not have to work out that way. So please never just trade on a fractal. I am just trying to imagine what a bottom of the market might look like based upon my theory of the market, which is that we do have these converging lines, and that this bounce up here may have just been a wild, exuberant retest of this wedge as the market takes all of the money back that it gave to the in the COVID crisis, and that that the market will want to retest that price now that there is no free money in the system, now that there is now that liquidity is all dried up. My theory of the market is that the market, all of us put together, the aggregate of all these economic forces around the world, will want to retest these prices to see how they can tolerate a non-liquidity zone, and then we'll go from there. Of course, that doesn't mean that I'm right, and we could just bounce from here if we break this wedge to the upside, or we could just hit a midpoint and then go on our merry way, perhaps at 14,000, perhaps at 17,000, perhaps at 16,000, or 11,000, or any of these other locations along the way. There are many to choose from, and we just won't know until stocks put in a bottom, and probably until the Federal Reserve makes a pivot. You can see right now I have updated all of these momentum zones. So if you are looking at these, teal and the kind of bluish lines that I have to the side, then you can see the dotted ones are the ones that you're going to be looking for recaptured momentum. We are quite a ways away from it. We are underneath the momentum that we need on CME. Just to quickly double check with the 24/7 exchanges, you can see also we are very far away from the momentum zone needed to cross up on Bitcoin, and so we are very much in danger of continuation to the downside. And what I wanted to point out on both of them is that we do have our volatility that does seem to be continuing to expand, and it's expanding to the downside. So let's take a look at the 4 hour, because the 4 hour was just on the floor, and this probably is part of what initiated our drop. So this explosive 4 hour volatility initiated that drop, and then what you can see is we're only halfway through that. So we are going to have to wait for this formation to start rounding. We are going to have to wait for the EMA on the 4 hour to pinch off before we can be reasonably sure that we've hit a bottom, at least by my volatility standards. Okay, that's what I want to see. Now, some other traders may be talking about higher time frames, like the 2 day or whatever, the weekly, whatnot. The 5 day. You can be looking at those things, but what I think we are under pressure from right at this moment is the 4 hour. Of course, I've analyzed a 4 hour momentum explosions before, and so you guys can take a look at my my volatility episodes if you would like to check that out. But I do want to see this 4 hour volatility to pinch off in the next couple hours, or by the end of the day, or maybe by tomorrow, in order to reassess where the bottom might be. Until then, I am going to be under the assumption that there is a strong likelihood that our volatility could continue to expand to the downside. And while we might be getting a little bit of a bounce, you see this line that I have here. It's a little bit. There we go. Just make it white for you. You can see that it's actually corresponding over here to some of the support that we have here, just very weak support. And if we just go back to the history of Bitcoin, you can see that there's a little bit of, this type of support and resistance over here. And so that's where we're getting this chop. That's where we're getting this hang up on the chart. Back here in 2020, we did have this little ledge that we kind of jumped off of, and so, to the upside. And so breaking underneath that 18,800 level would represent basically losing that ledge. And then let me see if I can go back even further. Let's see if we're, yep, okay, you can see right here, that also represents a little bit of this price action. You see this candle right here, you see these candles right here. It also represents a little bit of the price action at the top of the market during the last cycle. And so again, like breaking down from there, we're going to be talking about the next zone down, and that could be 17,200. It could be a little bit of these levels in between. It could be the bottom here at 16,200-ish. And so, guys, that's what I just wanted to point out to you in terms of our volatility continuing to expand as price action is moving to the downside. And while we can have a little retrace, we might just be fighting this line that I've highlighted here, and so we may look forward to lower levels. It just depends how good of support is that little ledge over here. And guys, just remember that little ledge did propel us to the upside in the last bull market. So don't discount this little ledge, especially since it's synced up with the top of the previous bull market all-time high. That little ledge plus that little point there can be significant support for the shorter time frames, for the mid time frame, until other macro pressures perhaps eventually push us through. So be careful about your long positions. They may pay off temporarily. As you can see, we're getting a nice bounce. Probably some degenerate altcoins are just firing off, but just be aware, as I pointed out, that volatility move is not over, and we often have multiple candles to the downside. It's not usually just one candle, and then we're done. Right? Even for these smaller dumps, we usually have a couple candles. We don't just have one candle and then we're done. Okay, so please understand what I'm trying to say. And let's go ahead and jump over back to the CME Bitcoin chart just to double check its volatility. I want to see what it's doing on the 4 hour. And yep, okay, look, okay, you can see very similarly a similar type of volatility expansion. This one actually started to expand back here, but it did just take some type of a consolidation, and now it's just skyrocketing. And so again, guys, as we approach the middle of this volatility, maybe that could be a chance for some hang up. You are seeing some hang up in price. You can kind of see something like this, but I would want to see this volatility move its way to the other side of the chart, especially since the 24/7 exchange already is well past the middle. I would expect the rest of this volatility move to carry out, and it's just not completed. So, based upon volatility, I do expect more downside. Obviously, I can be wrong. Okay, I can be wrong about that, but that's just how I look at volatility. Again, that was the 4 hour. Jumping back to the daily, let's go ahead and move over to Ethereum. And on Ethereum, you can see Ethereum just hanging on. Guys, look at this. I mentioned that it was very likely that we were going to get a pop up to 1700 on Ethereum based upon it having conquered that bullish momentum zone over here. And look what happened. It just popped up, but then the market just smacked it down. Of course, that daily 89, that daily 100 EMA, they are basically the same line. That often smacks you down. You don't always go the full move, and the 89 is kind of like a goalkeeper. It just tries to keep you away from your stretch goal. In this case, we had a stretch goal all the way up to 2000 if the market had remained strong, but unfortunately, we got smacked down by this resistance and by Bitcoin's wedge breaking to the downside. Now, imagine this: we have Ethereum with a bullish wedge to the upside, and Bitcoin with a bearish wedge that broke to the downside. And you see how Bitcoin won. Okay, Bitcoin continues to win in this market. Bitcoin is still the king of the market. Ethereum could not pull Bitcoin up at all. Bitcoin did not budge to the upside at all, no matter how bullish Ethereum wanted to be during this whole market trend. Ethereum had no power over Bitcoin, but Bitcoin catches a cold there, and you can see that immediately Ethereum has a reaction to the downside, and so Bitcoin is still king. Anyone under the illusion that Ethereum is running the show is just wrong, and so Ethereum is now losing those weekly bullish momentum zones where there would be the potential, okay, the potential to get back on a bullish macro trend. That's just the beginning point. There's a couple other stages you have to go through, but just for a beginning point, it's starting to lose it again. But of course, actually Ethereum has managed to maintain its bullish daily momentum, and so if Bitcoin does find support, then perhaps Ethereum can just continue to go on its merry way, as there's nothing really stopping this chart, unless the merge just goes completely wrong, right? Let's go ahead and look at Ethereum's CME chart. On Ethereum, again, all of these momentum zones are updated. I did update them before making this video, so guys, please appreciate the work that I put in to deliver these episodes to you. I am trying to give you accurate information. And so, as you can see on the CME chart, which of course is the professional exchange, it's kind of like the stock traders, you do see these just, wicks just pushing down heavily. So that is a lot of negative pressure, and you see that we have lost the daily momentum zone for Ethereum on the professional exchanges, and we've lost those, again, the dashed lines are the daily and the straight lines are the weekly, and we've lost completely the weekly hope of bullishness. So on the macro, Ethereum does look pretty sick, and it's just not healthy at all to be rejected from the 4 weekly, and to be only halfway in its momentum zone. It's just lost its bullishness, guys. So Ethereum is just kind of adrift right now. It's really waiting for Bitcoin to give it its orders. Let's just see if there's anything going on in the Ethereum a volatility. Yeah, we do see that break to the downside, but this does look like a lot of meandering. So let's just, it wasn't really on an extreme or anything. Let's go ahead and just jump back to Ethereum's 24/7 exchange. And I was pointing out, some of this action over here, but we can see that it is, well, this actually should be expansion to the upside. So I don't know. Anyway, nothing too extreme going on. Let's see the 4 hour actually. Okay, there we go. Yeah, we can see the 4 hour is rapidly expanding here. It is turning down. That was an expansion to the upside for Ethereum. It is turning down, but this can be uncrossed. So for Ethereum, there's still hope. And same thing on the CME. For Ethereum, there is still hope based upon volatility to continue to expand to the upside. But in general, this thing is just going to be at the mercy of Bitcoin. But you can see that there is the tendency on the Ethereum chart to want to rise. Let's go ahead and jump over to some of our coins. CRV. Guys, this was a kind of a classic fake out on these type of wedges. You often get little breakouts, to the upside or to the bottom side. That's why we always consider these lines to be zones. We don't want to just consider them to be hard lines, and you really want to see some solid candle closures outside of a line if you are looking at it as a line. But just being what it is, obviously just kind of chopping around in that kind of zone that it needed to break out of, and also underneath kind of that resistance in that area. You see these wicks, you see these wicks, right? See this wick? It was just chopping around underneath that, resistance line. There was a good likelihood that it was going to get smacked back into this wedge anyway, and so we really didn't get to hold on to on top of 120. But one thing that I did want to be proud about is that we were calling down here in the previous episode that if you got above 110, that you should expect a pop-up on CRV. And so, guys, if you took that trade, that was a nice 9% trade. And so, congratulations. I did recommend that CRV would be worth entering at 110, and that of course did lead us to a 9% move to the upside. Of course, I wasn't there when Bitcoin was breaking down and when this market was turning around, so I couldn't really give you advice on the collapse. But I hope that you guys did take my warnings. For example, on ADA here. To take your profit. And guys, I know some of you were a little bit upset that I was saying, take your profit. Everything was looking so bullish, but again, Bitcoin was looking just completely sick, and I was saying, better to take that 12% move that we got, Alpha Fam, rather than losing it all. And look what happened. If you didn't take your profit, right, you lost it all. And so here's our entry, and here's the where price came back to. So guys, again, like when I say always be selling, always be taking your profit, put food on your table. Don't just collect these coins. These coins aren't going to be loyal to you. Don't be loyal to them. This is what I mean. Look at this boomerang. You guys made 12%, and if you were on leverage, that would have been incredible, right? That would have been incredible. But as soon as you meet any type of resistance, take your profit, guys, okay? 10 to 20% is a good profit on any type of investment, and you can take that every single time. If you want to take it at 15 to 25%, fine, but you start wanting more than 25% at a time. There is a lot of greed there, and of course, just doing 5% and lower. I mean, unless you're really sniping and on leverage, it's probably not worth the taxes and the time that you have to kind of sit around watching those moves. But guys, in my opinion, 15 to 20% is a good move. And of course, this was 12%, but I did give the recommendation to get out a little bit early just because of the resistance we did seem to be facing. And then, of course, how sick Bitcoin was looking. KDA, what did I say about KDA? KDA, I mentioned, was looking like it was going to break down. It had a distribution wedge. A lot of people didn't want to hear this. They wanted me to say something super bullish about KDA, the way that Flux had been pumping, but I had to just be honest with you guys that KDA was looking like it was being distributed by KDA Wells to the downside, and that eventually these buyers were going to be exhausted, exactly like what happened with Bitcoin. And so you see KDA coming down to explore the bottom of its range, and this move might not be over. It really depends on Bitcoin. It really depends on the stock market to see how those markets are going to react. And then KDA will follow what they're doing because KDA is not putting in a strong performance right now. A lot of this drive up may have just been, fueled by, the potential of a return to a bull market. But when the guys who, bought way up here saw that the market was going to turn around, what they're doing is they're just dumping because, guys, they bought up here and they're still holding. And so when they got a little bit of relief in the market, they just dumped on your head. Of course, those KDA wells who are still sitting in their coins from months ago, they didn't take my advice to get out at the top around $20, around where I got out of the market. I bought at 36 cents, and I got out of this market around $20 and somewhere up here around 24 bucks, something like that. Not at the top, right? And not at the mid level. I got out around here and I got out around here. And guys, people who have just been holding this thing, thinking it was going to go to $100 or whatever, I mean, they are just in a world of pain. And so anytime that you see a little pump like this and then the market turns around, there is a good likelihood that it is going to dump hard, and that's why I say KDA very much likes to have those 100% retracements. It's not the new guys coming into KDA, it's the old guys from the last cycle who are still holding, and they see any pump as a chance to get out and de-risk from their coins, which they've been sitting in for too long. Perhaps the world is changed, and so maybe the needs of their family have changed. Maybe they need some money, and so that's a good place for them to dump. So just to be aware that a lot of these projects that just went, all the way to heaven, right? A lot of them are going to have these type of dumps if people got stuck in their coins at the top, okay, and just rode them all the way down. And then as economic conditions change, as we enter recessions, etc., they may want to dump. That's the basis of a bear market. A bear market will eventually, force everybody who needs to sell to pay for their food, to pay for their gas, to pay for their medical bills. It's going to force everybody to get out of their coins, and that's why you see these 100% retracements on KDA, even though it's a good project, okay? But we also have some tokenomics to watch out for, so just to be careful, make sure to review the tokenomics of the coins that you're in. I love KDA, but there are some things that still need to be worked out on the chart, okay? Great project, but just watch out for the tokenomics of it. Zilliqa, same thing. I was mentioning we did have a bit of a distribution triangle going on here. It's a really janky one, okay? So hard to claim that I'm 100% right on that. We did have this break to the upside, and I was getting a little worried. I was saying, Zilliqa is, basically captured its momentum zone. Used to be a little bit higher. It basically captured its momentum zone. It's working its way to the upside, but it really wasn't able to get any kind of a convincing daily closures up there. It wasn't able to break above this kind of resistance line right here. You can see it's still in this kind of a tealish grayish zone of mine, and so we can consider that it really didn't do anything. It didn't break out of where it needed to break out, and so more or less it was still just in this behavior of this distribution pattern with a nice fake out to the upside right before Bitcoin broke down. And you often see that with insiders making a little bit of a pump and dump before the market just dumps, because there are whales, there are dev teams, there are just people connected to crypto, in depth, who know how to basically exit an asset. And so if they had bought maybe in here, they would want a little bit of a pump, and then they got the hell out, right? Before this thing dumped on our heads. And so Zilliqa, again, exploring its lows, just like KDA. Maybe it could come back to 3 cents. Not sure. We're going to have to see where this market goes. There are some levels for it to explore to the downside, just like KDA. So, again, another great project. Okay, I like Zilliqa. This one was recommended by my friend Crypto Reda, as was a KDA to me, and so I'm going to just continue to monitor it. All right, it's done well for us in the past, and I think in the future it will do well again. They are continuously building. So again, I'm not trying to FUD any of these projects. The reason why I monitor them is because I do think they are decent projects. ADA is kind of a phenomenon. I'm not a big ADA believer, but I do follow it because I do think it has a lot of potential, and we have to give the benefit of the doubt to the ADA community, and also the people who've just been working on it for so hard for like 5 years. But of course, we would like to see, the Cardano family show something for it. And, right now we're just giving it the same benefit of the doubt that we give to like KDA and ZIL, because a lot of this next generation technology is still building, and we just want to see where it goes. One of those is Flux, and Flux is still continuing to do great things. You can see why I recommended to take your profit Funny enough, we are right back at that first take profit point. This is the second take profit point that I did strongly recommend. And so hopefully you were able to take your profit there, because if you didn't, you just had a retracement of 12%, and this thing could continue to the downside. But right now we are still above our momentum zone, which is going to be around $1.15 on Flux. So Flux continues to do well. It is using that previous point, the breakdown of the broadening descending wedge that we had as kind of support. So that's interesting. Maybe these wicks are kind of holding it up, suggesting that it might actually support itself in the zone. But Bitcoin can bring down everything. Stocks can bring down everything. So let's continue to watch this. But Flux continuing to be one of the stronger players, at least for the moment. Let's go ahead and actually take a look at this on the daily just to see what it's looking like. Yeah, it was quite overheated. We can see that on the daily. On the daily has to get under 112 to cross down. So 112 on the daily is kind of your magic number there. And let's see here. Yeah, warnings under 115. Let's see. The RSI wants to continue falling under a dollar 35. So we are a dollar 24. So the RSI may continue to fall. And then under 119, it may break down under the RSI. So something to watch out for. Basically, under a dollar 19, start to get a little bit concerned that this thing may have gotten toppy. Guys, but we are at a dollar 24, so we're not even close to a dollar 19. We're not close to a dollar 15. So again, Flux has some room to the downside, even if a Bitcoin continues to fall. Let's go ahead and just check our volatility. You can see the volatility did spike tremendously today, and so that's bad for trading. It is having a little bit of a pullback, but this does look a bit like a bull flag to me. So I would expect volatility to continue up. We are back in this kind of dangerous wedge that we've been putting on after that big fake out to the downside that we considered a bull run, but we are just working our way back up. And often, as we mentioned, like these wedges often have a fake out to the other side before the side that they really break from. And so if this thing continues up, I mean, we could be headed towards hell on the charts. So just pay attention to the VIX. It is a important indicator for how the market is going. The US dollar continuing to spike up. It is having a little bit of a pullback, but again, it's just been flirting with that $1.10 area, almost the mid $1.10 area, and so this thing just wants to continue to push up, and people keep saying that they see the dollar as topping out. Guys, I don't see the dollar as topping out until perhaps. I mean, it could have pullbacks, but I don't see it topping out until perhaps $1.14. Maybe I'm being pessimistic, but I just believe that this thing has the energy to go, up to $1.14. And so let's continue to watch the dollar, how it runs, and see who's right there. Of course, there is some type of bearish. Bearish deviations, or pardon me, on the dollar, but I don't really pay attention to that for things like the dollar, because I think what's more important is policy. So different governments are going to make different policies, and while traders definitely have their say, any change in policy can just easily overcome some type of bearishness on the charts, right? Let's go ahead and look at USDT. You can see USDT dominance. Look at what it did. It just popped up right to my line. And where did it meet resistance? Right at my line. And so basically, this is what we should have expected. It was bull flagging, as I mentioned, and that there should be a pop-up on the USDT dominance. If it breaks this line, watch out because that's going to be very painful for crypto. And of course, any pop up in USDT dominance is painful for crypto, as this represents people selling their assets. That's why Tether increases, because people sold their other stuff. Hence, why we feel pain when Tether dominance rises. Okay, so this is just a quick and dirty visualization of what's going on. But so far, it's been playing out. Of course, there was this falling wedge, which I forget the name of the trader. Was pointing out, but anyway, we did break into this channel, and then I've been monitoring that channel, and it looks like we're starting to resolve this channel. As we've broken through it, there is a strong likelihood that we should continue to the upside. So let's just follow this story. Guys, let's go ahead and jump over to stocks. As you can see, speaking of breaking their channels, you do see that the NAS 100 has broken down from this support area here. Now, that was critical support. Of course, in order to have some type of a macro bullishness, we needed to hang on to this area up here, according, basically around this red line that I have on the charts, and we just weren't able to hold that area. And so any illusion of just a bullish pullback for bullish continuation on the stock market was completely shattered when we broke this dashed yellow line of mine that I had here, because once we broke through that, there was no chance that this thing wasn't going to go down to the bottom of its range, to this green box that I had pointed out, and there was no chance of a bullish continuation. We could always have hope, as long as we were at the top of this range, that maybe this was kind of a fake out to the downside. But guys, we have now broken this region to the downside, and so that does suggest that this chart will likely push lower, probably exploring this diagonal that I have here, where you do see a lot of resistance, and it can be used as support, as you see right here, right? Used as resistance, used as support. And so this line, this diagonal kind of zone here, this could be where we end up getting a real bounce, our next real good bounce, just like we got a nice bounce right here. But failing that, we probably would see a double bottom first, and then perhaps pushing down to this diagonal, or maybe wicking down to it, where you see a very similar phenomenon. You do see, a lot of resistance off there, and then, getting ahead of that, we did just bounce considerably, and you do see this wick, and that wick pardon me, that's not a wick, that was my own line. Sorry, fooled myself. But you can see that there is this diagonal to the downside that we've been following, and so as we've been wicking off of this diagonal, there is the possibility that we push down into this area and start to catch ourselves and kind of hold on to this blue zone that I pointed out. But in the most bearish consideration, we might push down even further into this blue box that I have, and that would be quite scary for markets. That would represent something quite terrifying, which would be basically a 30% drop in the charts. And at the current ratio, you guys may have noticed on the CME chart that I did have a measurement down, which is a 60% drop on Bitcoin. This 60% drop right here, right? This is the CME chart, and you may have noticed that I did have a 60% drop, because I would expect that if the NAS 100 drops 30%, that Bitcoin would drop 60%. And again, guys, that takes us to my 8,000 $200 zone, it takes us to that $7,000 to $10,000 zone, which I do think is a prime suspect if the stock market does get its legs kicked out from underneath it, and if we do drop all the way to the bottom of this wedge. And this is why I have these red lines pointed out, because I just want to show that we have consistently been going from the top line to this trend line off of these red lines. And so look, if we have another red line here, where is the bottom of this bottom diagonal? It's right there at a 30% drop down. And again, like a 30% drop in the NAS 100, the NASDAQ 100, would represent a potential 60% down on the Bitcoin chart, which would be my target range of $7,000 to $10,000. And again, this thing can turn around before then. It could double bottom. It could make a higher low off of this diagonal, but we're gonna have to monitor this, okay? And so that's why I'm open-minded to the downside. Guys, I think we've touched basically everything. If you wanted to look at the S&P 500, basically the same thing going on, holding up a little bit better in that green box. But I think I am going to just to call it a day. This episode has been long enough. And so, guys, that was your alpha for the day. Stay safe and happy trading.